Officer at MK Investment Managers. Manish ji is a very long-term viewer of the market, has been on the Lal Street for the last three and a half decades, and has worked immensely well to create long-term wealth for his clients. Namaste Manish ji, equal pleasure and a very warm welcome.
Good morning, Shail.
कैसे हैं आप?
बढ़िया बढ़िया, all good. How are you?
All well. मार्केट भी बढ़िया है या नहीं?
Yeah, मतलब the whole point is कि बहुत ज़्यादा downside नहीं दिखता है. You know, we are not yet over with the Middle East, final signing at the dotted line in terms of, ceasefire and settlement. But we are somewhere very close to the bottom. लगता नहीं है कि, it will just break down because all the negative news that India could have had is already there. And if we have any sliver of a positive news, we shall see a very strong pullback. And today, in spite of all the worries that we have, Indian markets are being resilient. So in that backdrop, I think there is very little downside and a lot of upside, that is possible from here.
Manishi, how have you and your research team analyzed the Q4 earnings that just went by? What were the green shoots that you saw, and what do you think are troubling points still?
So, as against expectations, the numbers for the fourth quarter has been slightly better than estimates, is what I can make out. If you look at the Nifty 50, that was the biggest disappointment at around 4 to 5% sort of an earnings growth on a YY basis. Nifty 100, which is the Nifty 50 next, did the heavy lifting in the large caps, and the earnings growth for Nifty 100 was around 12%. And as far as the mid-cap segment is concerned, that saw the biggest growth in earnings, which was north of around 50%. We computed that at around 51%. And the small cap space actually saw an earnings growth of around 14%. So this is how the earnings have shaped up across the market caps in the fourth quarter. Of course, in the backdrop of the Middle Eastern war having started on 1st of March, 28th of February, 1st of March, the full-blown impact of the negativities around the Middle East strike would be seen in the first quarter. But suffice it to say that the fourth quarter numbers have been pretty decent. And if we take a base case scenario that let's say the Middle Eastern crisis will get over quite soon, then obviously this one-off impact that we are likely to see in the first quarter could be taken as a one-off, and markets would still be posting around 13 to 14% earnings growth for Nifty 50. But if this gets prolonged, and there's a small probability of that even happening till it is signed, you could see bigger impact on Nifty earnings for FY27. So all fingers crossed. Today, the base case scenario is 13 to 14% earnings growth for FY27, even in the backdrop of the Middle Eastern crisis, with the assumption that this crisis is going to end very soon.
Okay. Let's take that assumption forward, and this crisis is going to ease out. Already you have similar remarks coming out from the White House, and oil is also slipping down. Manish ji, what will this mean for the Nifty if Q1 is showing signs of weakness? Do you think the market should react adversely when those numbers come in July?
No, because
we are about 1 month away.
See, the assumption is that if it is signed before 30th of June and results start to come from, let's say, 14th of July or 12th of July, then this aberration in Q1 numbers will be taken as a one-off, because the rest of the 3 quarters will be continuity in the earnings projection, because oil is likely to come down from where we are, north of 100, and that is going to have a repercussion on the macros per se. So I think by 30th of June, it is very important that this Middle Eastern crisis should come down. And in that backdrop, if we work with the number of continuity and the numbers for EPS and Nifty 50 comes to around 1250, and I think 20 times multiples on the Nifty 50 is sustainable with the 13%, 14% sort of a growth. So I think 25,000 is a fair scenario to look at from the continuity of earnings point of view. So I think range bound markets 22,000 to 25,000 till we have final signing on the dotted line comes.
Fair point. This is a very sensible and practical way of looking at things based totally on data. Now, Manish ji, tell us, based on this Q4, how has MK changed its, maybe its model portfolio or its views that it offers to its ultra HNI clients? What have been the major changes on the positive side, and what have you given away in the sense of stocks being added or removed?
So we are on the buy side. We are a part of MP Investment Managers, part of alternate investment funds. We manage public money on a discretionary basis. I think the key highlight of the fourth quarter actionables in our portfolio is that there has been a very strong case against IT services. Because IT services in the backdrop of the AI disruption, the allocations have come down. So we have also truncated our allocations in IT services from being overweight previously to being underweight currently. At best an equal weight in some portfolios, but broadly an underweight position. That is one change that we have made. And I think financials, we had an overweight. Pharma, we are trying to become slightly overweight. We are maintaining a quite positive stance. And given the fact that Pharma had been a drag over the last 2-3 quarters, this sort of a positioning is going to help us in the future. This is what we think. And broadly, other sectors have by and large remained unchanged. We have added a few new age companies in our portfolio, but otherwise things are status quo. We are looking at a few names in the energy sector and a few names in the defense space, particularly the drone space.
Yes. Manish ji, as an overall number within MK Investment Managers, what is the number of stocks that you hold, and what is the bias in terms of market capitalization? Are you tilted towards mids and smalls, or are you focusing on large?
No, so number of stocks is basically limited to 30 stocks. We really don't want to buy more than 30 stocks in the portfolio. So, some portfolios even have further concentration than this. We would have 15, 16 stocks also in some portfolios, but we maintain concentrated portfolios, and the mandates of the fund is basically we have very limited number of funds. We have a large cap biased fund, we have a multi cap, we have a small and mid cap, and we have a thematic. So these are the four major products we have, which is straddling the entire market, but the mandates are different for each fund. So it's not that there is one single fund catering to all the requirements. Each specific fund has its own mandate. So we are positioned across market.
Okay, so let me just try and understand it again. You have an exposure to 30 stocks. You have reduced your weightage to IT. You have brought it up in pharma. That's correct?
Yes.
Okay, perfect. Now, defense also, you mentioned, especially the drone makers, they like, you've shown attachment to that.
We waiting for some announcements to come through. We have some stocks on the radar, but not yet pulled the trigger. But let's see when this whole developments around the 20,000 crore order come through for the drone manufacturers. If that comes through, we have a few names in mind. We could have a look at that.
Mm-hmm. A view that you might have on the rupee, is the worst over?
It's undervalued for sure, even considering the fact that we are looking at oil at around 104 on the Brent. Considering all of that, I think the fair value of the rupee should be between 90 and 92 and not where we are. So yes, the rupee is undervalued, and should this Middle Eastern crisis come through, then this 2% current account deficit is par the course as far as normalization is concerned. It's not an alarming situation, this 2% CAD, but this should not get prolonged, and beyond 2% CAD is a problem for us. We'll have repercussions on the balance of payments. Gross FDI numbers for fiscal 26 has been quite good. It's the net FDI numbers that are a negative, because we have a lot of PE funds and FI exits that have taken a toll on the net FDI number. But gross FDI numbers at $95 billion is pretty decent. So yes, I think everything hinges on when we see an end to this whole crisis.
Within the group of 30 stocks which you have as an overall representative theme, how many are pharma shares?
We have a decent number of pharma shares. Depends on each portfolio, but we have straddled across export generics, the larger ones, export generics having exposure to specialties. We are heavily positioned towards CDMO space, quite a few names, prominent ones. That is where we are, and a few domestic pharma companies as well.
Okay, fair point. When we look at the broader trajectory of the market, Manishji, because you work at a blue chip brokerage, a lot of clients would also have overseas exposure. How are you looking at, the rallies that are happening in Seoul, in Tokyo, in Taipei? They're draining away money from us. Are we at an inflection point as far as those markets are concerned? Too much of rallies there and abject underperformance at our end. What does your gut say?
No, so basically, this whole AI thing, the three major companies coming out with an IPO, $1 trillion each, OpenAI, Anthropic, and SpaceX. 12th of June will be, I think, around the SpaceX $1 trillion IPO. A lot of the artificial intelligence success or failure will depend on the success or failure of each of these IPOs. And in that backdrop, as long as the AI theme continues, you have the requirement for chips, you have the requirement for memories and DRAMs and all of that. And obviously, the South Korean economy is a play on the memory space. The chip space already seeing some sort of exertion in the United States. We saw very sharp falls in chips space. Some allude to the fact that the data, the AI narrative may be slowing down, but all of that is basically business in continuity. Success or failure of each of these large $1 trillion IPOs will mean a problem or a success. As far as our understanding about the global markets are concerned, we think that it's best to position yourself in the eastern part of Asian markets, or the South Korean markets, or the Chinese markets are better placed than the US markets, where the concentration risk in the Magnificent Seven or the top 10 stocks, particularly catering to the AI space, is fully valued or maybe bordering on the froth zone. So in that backdrop, we should likely be cautious on the US space, but otherwise, Southeast Asia looks okay.
Okay. Indian macro was something to be really, really, proud of till about, January. Now we are seeing signs of cracks, foreign reserves are depleting very sharply. Rupee, as you mentioned, has depreciated. CAD is rising. All sorts of problems are coming in. Till what point of time do you think this macro will deteriorate?
No, so I think the crux is basically the solution to the Middle Eastern crisis. Our vulnerabilities stand around energy. This Strait of Hormuz blockade has actually exposed energy security of India very, very badly. This Strait of Hormuz as a choke point could be leveraged to India's disadvantage even in the future. So I think that is the whole focus, that India should try and become more self-sufficient in energy, whether renewables, whether development or oil exploration blocks in and around the Andaman, and wind and battery energy storage, all of that. We need to get our energy security right. And our vulnerabilities basically stem from that front. And we should accelerate our AI play very, very sharply. We have behind the curve in our AI play. The second layer of AI usage is where India is banking on. The first layer of AI is basically owned by the US giants, the large language models, etc. That is their proprietary. But when it becomes open source, we will, like in any other technology revolution, we wrap around that new technology and make use cases. That is also likely to be the case. So this is the transition period. We should basically try to bridge this loophole in terms of higher energy and lower exports of IT. This is basically the conundrum which is playing on India macros. on the balance of payment, the fiscal deficit, the current account deficit, etc.
Okay, perfect. Uh, Apart from IT, Manishi, anything you feel is not up to your mark in terms of either earnings growth or maybe valuations?
So valuations have corrected. The same profits which were valued at, let's say, 40, 50p 1 year back, particularly in the broader markets, have got corrected to half of those numbers as we speak today. So it's not that the earnings have disappointed, it's basically the valuations have corrected. And now we are trading at almost 5 year average valuation. So in that backdrop, I think some of the sectors which are clearly headwinded are basically the likes of those surrounding your travel and tourism, because we have a crisis at hand. Costs are going up, particularly international travel, etc., have become very, very prohibitively expensive on account of rise in fuel costs as well as currency depreciation. So tourism, hotels, travel, airlines, these are somewhat more headwinded sectors apart from IT.
Okay, fair point. Manishi, the Prime Minister stepped up and said that, pause gold purchases for a year. Obviously, we see an actual fall in imports, and jewelry shops seemed to have, borne the brunt. Are the best days of silver and gold behind us?
No, I don't think so. I think in the AI environment, a lot of these base metals will be used as consumables. So, the silver, germanium, this whole AI play will require a lot of these rare earths and the precious metals also. And I think one's portfolio, you should have an exposure of 5 to 10% in bullion. And yes, there is a need for lower imports of gold for the time being. And once this situation normalizes, we should be back to normal. And India broadly imports around 700 to 850 odd tons. Costs have become very prohibitively expensive. So your grammage in any case are coming down. That is for sure. And in the backdrop of increased duty now, the consumption will be lower. But as an asset allocation, I think there should be a place of gold and silver in one's portfolio. Maybe 5 to 10% is normal, and we should look to increase the exposure once the situation normalizes.
Okay, Manish bhai, we'll pause it here. Thank you for coming. It's such a pleasure to listen to your wonderful thoughts, and let's hope that the worst is behind us and that
Yeah.
Q1 will absorb all that negativity, and that we'll have fantastic quarters ahead. Have a nice day and all the luck to you.